been a bit of an outperformer over the last 1 month.
23,816, which is the recent close, should be defended if some of this has to play out.
We actually exist across the value chain.
Around 24,300 is where the Nifty is opening up, about a quarter higher.
We find some pressure on the high caritas solitaire.
The food delivery business itself has seen pretty steady growth.
The Nifty is above 24,400. All sectors in the green.
We believe that it's very, very important to communicate directly with the consumer.
Now, it's quite clear that Iowa is going to Donald Trump as well.
It's been a good day so far. We have seen recovery from lows. 240 points higher on the Nifty.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that is the day so far. We're starting closing bell early. It's a historic day, and it is a red sweep as far as America is concerned. Polls were saying it's going to be close. Guess what? It's nowhere near close. The outcome is absolutely clear. Not only has Republicans won the presidency, they won the Senate. They've flipped the House as well, if you believe some of the projections which are coming through. So this is a historic day. Markets doing very well in the US, here in India, and around the world as well. I'm Prashant. With me, my colleague Surbhi and Nigel. Surbhi, hi.
Hi, Prashant. And I guess this one time, markets got it a lot more accurate and right than pollsters, right? Because the kind of buildup that we saw on Wall Street overnight, the move in commodities, the move in global equities, I think the markets actually called it right.
Markets called it right. They've been calling it right for the last few weeks, right? The Trump trade, so it's just be higher dollar, higher yields, higher equities. But as we got into it as natural, some of those were pared back because you don't know. The polls seemed very, very binary. But I think all that is now a thing of the past, and you've got a victor on your hands. So I just wanted to do this, and I think I'm paraphrasing Trump's mannerisms. The greatest ever, the grandest ever,
The greatest ever, the grandest ever
the victory.
Election outcome.
You heard him.
By the way, guys, look at this. Nigel, check your screens. 1,000-point surge on the Dow right now. 1,000 points. That's what the pre-open Dow Jones rate is indicating.
Well, I'm looking at the 1,000-point surge here in our mid-cap index. We're up close to around 2% or thereabouts. And, besides the move that we're seeing in yields as well as on the dollar index, I think from an India macro perspective, Trump is normally, what you align to negative crude oil prices, or there is likely to be a lid on crude oil prices, which is a macro tailwind. So I think among everything, it'll be very, very volatile. We'll have to see what he does next. But it's safe to say that crude oil prices, there'll be some kind of a ceiling to that, which is a macro tailwind, and it's good for Indian markets as well.
Absolutely. So once again, let's actually look at some of the global reactions in terms of how global markets have shaped up, and then we'll come to India. Like I mentioned, US futures are absolutely rollicking away. The dollar trade has been so strong today. 105 is still evident on the screen. That's a 1.5% move on, one of the biggest widely traded currencies in the world. That's the kind of surge that we've had on the dollar. And if you look at the US 10-year yield, at the highest point, it was at 4.43 thereabouts, still retaining a move of about 4.4%. For us here back at home, it's been a very, very strong comeback by the bulls as well, and this is the second day running. So the question is going to be, is this a durable recovery? Now, have we seen the worst in terms of the October lows, finally making that low in November? Was that the durable low of our own correction or not? Right now, the screen's looking good. 2% up on the mid-cap index, as Nigel mentioned. Bank Nifty is a slight underperformer, but we have IT, we have a lot of other pillars that are firing away for the bulls today. Prashant, over to you.
I've sort of moved across to the wall here, and you will hear lots of what a Trump victory means for the world, for markets, for emerging markets, for the US. And, that'll be something which we will continue to get to you. But, what I've done is just looked at essentially what Mr. Trump has said in his speeches, in interviews about some of the big stuff, which I think we'll all watch very closely. Now, he's had views straight up, same views for the last 25, 30 years. and he has believed that tariffs are a fantastic idea to sort of encourage your own manufacturing. You can go back to his interviews in the late 80s, 90s, and he's a tariff guy. So what has he said, going into this particular election? He's promised 10% tariffs on all imports coming into the US. He's sort of talked about something called matching tariffs. So, if you tariff American goods coming into your country, your goods coming into America will be tariffed at the same rate. 10% tariff on all imports. 60% tariffs, if you can go back to the last plate, 60% tariff on Chinese imports. That's point number 2. There you go. That's what I'm talking about. 60%. Now, we don't know if this is a starting negotiation or will we actually see 60%. Most believe it's highly unlikely. It's a negotiating tactic. Let's move to the next thing, and this is more relevant to US markets and US equities. He's promised to cut the corporate tax rate in America to 15% from 21%. And we just heard him talk about it in his victory acceptance speech, whatever you want to call it. He's promised to increase US oil production. Just from an hour ago when he spoke, he said, well, we got so much liquid gold. He was referring to black gold, oil. And he said, well, we can reduce our debt substantially. Drill, baby, drill, right? I mean, we've heard that phrase before. Some of the other stuff, eliminate taxes on tips and overtime. I mean, this got him a lot of favor with the working class in America. Deregulation, of course, has been a big sort of initiative. And Elon Musk, the richest man in the world, sort of, joining forces. He's talked about the Office of Government Efficiency. We don't know if such an office or such a title will be created, but it's been constant from both Donald Trump and Elon Musk, who's been sort of at his side through over the last 2 months or so in this campaign. And of course, the last one is immigration. That was a big campaign point, illegal immigration in America. They've talked about deporting illegal aliens in America. We'll need to see how they will actually go ahead and do some of this. What I put out essentially, I mean, all these points are what we may see with a sweep, which is, Trump president, Republicans controlling both the Senate and the House. This is scenario 2. I'm not sure how relevant this is now because we know for a fact that Trump is, although it's not been officially, all the votes have not been counted, but he is president. We know they've flipped the Senate. But the House, according to some, is still in the race. It's up in the air. We don't know. If it is a divided House, which is the Republicans have got the presidency and it's a divided Congress, remember, the president can unilaterally act on tariffs. But for fiscal policy, you need the Congress. If it's a divided Congress, which I think is not the case, it's a sweep most likely, and it'll be clear in an hour or two from here. What perhaps we see is tariffs and contentious negotiations, some of the fiscal bump, tax cuts, etc., that might take a bit of a backseat. But as I said, I think it's scenario 1 that we should work with and look at here as well. Let's actually welcome in, someone who tracks the U.S. elections closely, U.S. markets closely, and someone who's seen many, many elections. Ramesh Damani is member BSC, noted investor, needs no introduction really. Mr. Damani, great to have you with us here on the program. Thanks very much for joining us. It's quite a day. It's 3 a.m. in America. It's 2 p.m. here in India. And I mean, it's just been an amazing race. Your first thoughts, Mr. Damani, what are the implications as you see it with this kind of a sweep? Go on.
Thank you, Prashant. I think it caught a lot of people by surprise. It's a clean sweep. I think he's got the White House, the Senate, the Congress. In fact, even the popular mandate, the popular vote has gone in Trump's favor, which hasn't happened many times for Republicans in the past. So I've said this before. You've heard of the Academy Award-winning film, The Last Emperor. He's going to be the first emperor of America. I think he'll be one of those unchecked powers in America. But before that, I would like to congratulate the American people. I'd like to congratulate Donald Trump for one of the historic elections and the peaceful transfer of power that we're witnessing. It's actually a majestic sight to see this transfer of democracy and how people vote. Absolutely astounding, remarkable, and in my opinion, one of the great comebacks in political history. I can only think of 2 comparable comebacks. Richard Nixon in 1960 lost the presidency, lost the governorship. 6 years later, he was sworn in as the next president of America. And Winston Churchill, 20 to 40, was in the wilderness. Then he led the Allies and became the greatest statesman of the 20th century. So 2 great political comebacks. This is probably the third.
Mr. Damani, absolutely, and that's so well put, as always. In terms of themes that our viewers should focus on from a market perspective, what is your sense? I mentioned that drill, baby, drill, more American oil production. He's always said, well, we've got enough of this stuff. We don't need to import it, and we should do more. Of course, people who are worried about climate change may sort of differ with him in that sense. But he is all for increasing American oil production. Is that kind of the big thing for the rest of the world to begin with? Lower oil prices? What's your sense?
I'm not sure the US president controls oil prices. There are a lot of factors that control it. As such, we expect oil prices to be subdued because we are transitioning to green energy and electricity and so many other things. So that's a different question. But I think personally, if you ask me, Prashant, the market is having a honeymoon today as well it should. We've had a honeymoon in the Sensex. Dow will open up with a huge gap, as you're pointing out. So every new president is accorded a honeymoon. Plus the fact that there will be no resistance to the plans he does means there's some buoyancy in the market. But if you look closely, I think the world that we lived in from 1950s after World War II to today rested on the backs of the US. The US opening up its markets, the US encouraging world trade, US encouraging immigration, US giving most favored nation status to a lot of emerging market countries so they come up to speed. That is about to change. So I think, though, in my opinion, the economic axis of the world changed today. And I think we'll have to sit back and maybe with more reflective time, understand what the implications of a second Trump presidency means. I think they are going to be far-reaching, and the world as you know it, the economic world as you know it, will have changed.
Mr. Damani, sir, good afternoon. It's so good to have that perspective from you this afternoon on this big day. And I now want to sort of veer towards India and what this Trump victory means for us. Now, we already know about the great personal relationship between Mr. Modi and Mr. Donald Trump, and we've already seen the exchange on X in terms of the congratulations, right? And then there's the China angle. Now, purely from a market perspective, given the history, given the tariff tilt, so to speak, and the expectations, is Donald Trump at the White House going to be positive from an Indian equity perspective?
See, there's a well-advertised bonhomie between Modi and Trump, which I understand, but I think international relationships are much more complex than, getting along with each other. Let's just take two issues that, first, all of Indian goods will probably face a tariff barrier. I think Trump has already signaled that during his election campaign, that India is taking advantage of the lax US laws and sending stuff to America, and he'll impose tariffs. So that is not good news for India. Secondly, we'll curb immigration. A lot of Indian technology depends on legal immigration to America, which may stop over a period of time. And the thing you have to remember is that now Trump is going to be a lame duck president. He doesn't have to go back for an election ever again. But he's also an unchecked power right now, because everyone, after this extraordinary comeback, everyone will bow to his wishes, including a Republican Congress. So he could say, for example, if India doesn't support me in Afghanistan or India doesn't support me elsewhere, I will do so and so to India, and there is no pushback from Congress. You recall in the 1950s and 1960s, when India was the head of the non-aligned movement, did not align itself with America, but American aid in PL 480 and other terms continued on in India. That did not stop Indian aid coming, American aid coming to India. So this is a whole new ballgame. I think, the victory, and such a sweeping victory, has been such a shock to the economic system that it will take us a while to absorb it. But I think the honeymoon perhaps will be good for the next few days. But after that, we need a hard, realistic check as to what the world and what India will look like in its place in the world over the next few weeks.
Mr. Damani, what I gather from you, and correct me if I'm wrong, what you're saying is, you're tilting towards that. You're not saying it. You're saying it's good for US. But for the rest of the world, you're not very sure how this is really going to pan out, especially for emerging markets. Am I paraphrasing that correctly?
Yeah, I think what will happen is that if you support Trump's policies, and sometimes in foreign policy, India and America have very different goals. But if you follow the policy, Trump will be a friend of yours. But if you try and steer independent policy, you may find a vicious backlash. I think what would benefit, of course, at least in the first few years, is what we call the China +1 policy. I think this will encourage US manufacturers to seek sourcing, supply chain, manufacturing bases in India. So in that limited sense, it will help India. But I'm not sure how increasing tariffs or lowering the pie for the global trade or lowering immigration would help the world. I'm not sure about that yet. And I think, clearly, if Ukraine is given up or if Trump does not want to support Taiwan, if China annexes it, I think that will be bad consequences of the world. I think the institutions that we relied on in the world, the IMF, the NATO, will all be under threat under a Trump presidency. So while we enjoy the honeymoon right now, I would be a bit more circumspect as I study the policies that a new Trump administration might follow.
That's so beautifully put, right? I mean, it is unprecedented and perhaps unchecked power that we're dealing with. And it could go either way. That in many cases it does. It's like a double-edged sword, perhaps. That's the point Mr. Damani seems to be making.
Unchecked power is what Mr. Damani has said twice. But sir, what according to you is driving this big IT rally that we're saying? Because in the first Trump administration, we did see tighter controls on immigration, and you alluded to it as well. So apart from the honeymoon angle, what else explains this 4% pop at the on the index level for tech?
I'm not sure, but I think even a basic understanding of technology will make you understand that if you want your serious projects done, you have to come to India because it offers the software, the expertise, and the large-scale experience that your company might require. So I think that business will continue to do well, and ultimately, whether it's Trumponomics or whether it's America, you have to bow to economic reality of life. If you want a project done, you have to get it done in Hyderabad or Bangalore or any of our software centers. So I think that generally will be good for India. And I don't expect to see a major downfall in the technology spend space from America, because it is quite critical for America to remain ahead of the world. And if they want to remain ahead of the world in software, they almost have to come to India.
And do you see any realignment that emerging market fund managers would do in their pecking order? There was a tactical lift to the exposure to Chinese equities about a month and a half back. Do you see, if you were an emerging market fund manager, what changes would you make till we get more clarity on the policies?
I would look for China +1 policies, and I'd look for people who are firmly in the camp of America, like Israel, for example, under Netanyahu, or other emerging markets that are firmly in the camp for America. I think this is going to be, America is a very tolerant nation. It kind of had a white tent. You could have a disagreement and still do trade and business with America. I think that will stop, and I think that is something that analysts have not figured out yet. That, Trump has a long memory, and the knives will be out if you oppose American foreign policy, say in the Middle East or say in Africa. So, I think that trade will be dictated by supporting U.S. policy. I think that's a change that emerging markets are not used to. They're used to living under a big tent with America where you could have, disparate opinion. I think we need to give him time. I think he's going to be sworn in still 3 months away on January 20th. So there's a long window yet for it to be done. There will be enough time to study the policy. Meanwhile, India is prospering because of its own economic strength at the current time. I think that will continue. I think there's a correction going on in the market. But when that correction is over, I expect the market to resume, irrespective of what Trump does, at least in the short term. But in the long term, what U.S. does is profoundly impactful across the world, not only in emerging markets, not only in India, but also in the developed economies of Germany, Britain, so on and so forth. So America is the centerpiece of the world. The only caution I'd like to make is that what Trump has suggested, ma'am, is that he would do a lot of tax cuts. For example, if you make tips, he would make it tax-free, Social Security tax-free. So where is the money going to come from? Does it mean that the budget keeps growing, the deficit keeps growing in America? I mean, it's at $35 trillion now. I don't think there's much room to increase it. At some point, the bond vigilantes, whether it's a Republican or Democratic administration, will come on and force discipline to the government. And I think in this 4-year term of Trump, if there's unchecked spending under a Republican administration, the bond vigilantes will be out and will force discipline to the government. There may not be any checks and balances in terms of the legislative branch in America today, or even the judicial branch. But the bond vigilantes are also religion on their own, and they will make sure at some point they will ensure a discipline in the economic performance of the administration.
No, Mr. Damani, we were discussing exactly this in the morning when that massive move on the US 10-year yield started, right? I think the manner in which the bond market is reacting is clearly showing that the bond vigilantes are really active. So now that we know what's happening in terms of politics in the US, and we know that Mr. Trump, in all likelihood, will the policies will be more inflationary, deficits will probably go higher. Now, what about interest rate policy in the in the US Federal Reserve and around the world? Because that's a real complex piece as well that markets will have to grapple with. Will you expect the Fed to continue on its rate cutting path as it had guided with the change of regime in the White House?
You know, if it is not cut, if the Fed decides to cut it, I think they will fire the Fed chief and replace him with the new Fed chief. That is Trump's knee-jerk reaction to this problem, as we've seen in the past. So I'm not sure if he would be different at this point. He's clearly a votary of a cheaper dollar and lower interest rates happening. But unfortunately, they collide with sometimes with the budget deficit, which in my opinion is now getting to be unsustainable levels. It's more than GDP for the first time in American history. Now, he's often said that he will cut defense expenditures, wasteful defense expenditure, the Department of Education, try and bring this under control. So we really don't know at this time. I think we need to kind of sit back and see what he does. But I think this unbridled honeymoon that we are witnessing today will probably be a passing phase.
Hi, Mr. Damani. Good afternoon and good to see you in. Nigel on this side. You know, just before we wrap up, I wanted your view on how the commodity space will pan out. Because China is the big boss in there, right? They produce maximum of steel, maximum of aluminium. And we know in the last tenure, he put in those tariffs. So one school of thought is he can't do anything more out there. But, you know, how do you play these Indian metal companies? You know, will it be positive or will it still be some kind of uncertainty out there?
You know, I'm not really a metal analyst, so I will pass on that direct question. But what he has seemed to have suggested that he'll put a tariff from 20 to 60% on all goods coming into America, not necessarily goods, the complementary that India puts that tariffs or Argentina puts that tariffs. From what I understand, he'll put in all tariffs coming to America. His thought process being that the money raised through tariffs, which is of course a national sales tax, nothing other short of a national sales tax, but the money raised through it will mean that he can reduce the corporate tax rate. In fact, he sometimes wants to abolish the corporate tax rate in America. Now, there are twin sides to it. Of course, if you reduce corporate tax rate, it would unleash productivity, capital, employment, all these things. But there'll be a lot of inflation due to tariffs. So I'm not sure if that's a negotiating strategy that he's going to use or that's something that he's actually going to implement with, say, a few countries that he dislikes. You know, it's the ball's in the air as to what he's going to do at this point on tariffs in particular. But my feeling is that the last time he tried tariffs in the 1920s under McKinley presidency in America, it ended ultimately very badly in the Great Depression. I'm not sure most economists would agree with that policy at this time.
Mr. Damani, you know, you said the honeymoon. We are in a bit of a honeymoon phase, but that will pass as it always does. As you kind of, it's kind of tough today, especially because the results are out today, to separate, you know, the U.S. elections with what the market is doing. But in a day or two, it'll become old news. You know, with the near 7-8% drop that we've had from the highs, Mr. Damani, how are you liking market valuations, levels? Are you still a little cautious here?
Yeah, Prashant, great question. I think it seems to me that the market wants to spend some time in a time and price correction. I'm talking about India now, that we want to spend some time and price correction. So in effect, we've made the highs, I think, for the year. And I think it'll take 2-3 months for the market to consolidate and then go back towards the old highs. I feel that what we are witnessing is only a correction of bull market, not a reversal of the bull market. And part of the reason I'm telling you the screen looks much better in the last few days. Stocks have made new highs. The midcaps have again started performing. So the scared feeling that we had that maybe the market has topped out is probably unwarranted in India. I think the market is just moving sideways. Might spend 2 months, might spend 4 months moving sideways before it goes back and tests the old highs. And I think it's correct only because of some underperformance, some problem. Market has corrected, which is good. We want a market that, you know, retains healthy and retains a good sense of valuation. So having studied the market over the last few weeks very closely, I am sitting on a little bit of cash personally, but I'm very uncomfortable sitting on cash. I'm trying to look and invest back in the market, but you want to find the appropriate valuation to invest in. So while that game goes on, I feel the market will probably consolidate for the next few months.
But
just a few areas, Mr. Damani, which, again, sorry I'm pushing you, and you don't have to talk about stocks or anything, but just 2 or 3 themes, right, which in my conversations, it came up. Pharma came up with, especially companies which have got manufacturing facilities in the US, not outside, because now, exporting in perhaps incrementally maybe a little tougher, but capacities in the US, so those are companies. I mentioned oil earlier. Somebody just messaged me saying, well, what happened with defense? And you know it better than anyone because you were you flagged it off the earliest. The gentleman points out what happened with defense perhaps is now going to happen in oil. Big re-rating moment. I don't know. I don't know if you have any thoughts. And so these are the kind of, people are just trying to work out what are the slightly medium to longer term implications. Any thoughts at all, Mr. Damani? You said you don't want to sit on cash. It's uncomfortable feeling. So, yeah, go on.
Yeah, I mean, we've all of us in the markets who came in the 80s, 90s have made our money because we remain invested and we rode out the volatility that came with India. In the last 25 years, you bookended between Y2K and the COVID pandemic. And at the same time, you decide to get too smart and get out of the market. I think you lost on some great money-making opportunities. So we basically understand we want to remain invested in the market. We want to ride out the volatility. I think there's a risk in not investing rather than in investing. But sometimes you sell some overpriced shares. You want to buy some other shares. And I think I'm in the transitory phase right now. Speaking particularly about the defense companies that you mentioned, I think in America, for example, I think defense industries will take a knock because I think he will stop the exports to Ukraine, which has made them work double time, extra time. And I think it will be more for domestic consumption rather than export consumption. I'm not sure, but I think defense will probably cool off in America. In India, I think if you look at some of the shares, I think they will probably come back. I think the earnings have been good. The order books are pretty visible. Some of the companies will probably do fine at this point, in my view. In terms of oil, I'm not sure how to play this. At this point, oil prices will remain under control. So you'll have to kind of think and see what will happen based on that. But, there is some terminal value to an oil business also.
So to conclude, Mr. Damani, you said that while the market may consolidate for the next 3-4 months, maybe we've made a high for the year, you don't seem to be finding any problem as such with the market. Is that right? Earnings, there's been some murmur about an earnings slowdown or maybe a lot of FPI selling continuing. Do you see any real concerns at this point in time? Or will this just be a consolidation to digest some heady valuations?
I think the latter. I think should probably be the latter. I think, we've been watching it very carefully and, it's been a great run and the index has tripled in value and you feel that maybe it's peaking out. And there was some suggestion that it was peaking out. But then in a peak out situation, you don't have companies going back and making new highs. A lot of companies that I follow have reversed courses and made new highs. So, that kind of suggests that the market still has a lot of strength, a lot of money coming in. I think just, money, the foreigners sold. And again, I don't begrudge them. They have 800 billion of portfolio. They're selling 8 billion. No big deal, really. We should be able to absorb that. So I think the market has entered a consolidation phase. It might last a few more months. And I think that's fine. I'm not in the votary of camp that unless market makes a new high every month, it is not a bullish market. I don't belong to that camp.
All right, Mr. Damani, we'll leave it there, sir. Thank you very much. Really nuanced and excellent thoughts there. And thanks for sharing those thoughts with us and our viewers. Appreciate your time here on CNBC-TV18 as always. All right, well, that's Ramesh Damani with perspective on implications of US elections and markets, of course, as well. I think we have Taimur Beg waiting by to talk economics, right? MD and Chief Economist at DBS Research, DBS Group Research. Taimur, thanks for waiting. Apologies. I know you've been sort of listening in, but it's a big one. From a economics perspective, from tariffs and trade, how do you read this Trump sweep? And it is a sweep Because he's got the Congress and he's got the presidency
No, he
as well.
doesn't. He doesn't. He doesn't. Let me correct that. You guys have been talking about it over and over again. That's not correct. He doesn't have the House. It's still too early to call. The Senate, yes. The presidency, of course, historic. But don't say sweep. It's not correct. Maybe it will be at some point, but not yet. In terms of
aren't they already calling?
No,
aren't they already?
No, absolutely not.
Okay,
House has many seats, waiting to be decided in the West Coast. It'll take weeks, not even today or tomorrow.
Okay. All right. So we won't. It's so yeah, sure. So presidency and Senate. Go on. Implications of the election for emerging markets. Go on.
Right. And we should not sort of separate economics and markets. They're intertwined. So oil is economics and markets. Crypto is economics and markets. So let's say what happens to the expected currency/interest rate nexus for emerging market economies if the Fed cannot cut a lot of interest rates in 2025 because Trump's policies of cutting taxes and tariffs would push up inflation, and then that acts as a brake on the entire EM dynamic, which is rate cuts, which means lower cost of capital, which means buoyant equity and capital markets. So I think that is the first spoiler for emerging market economies that we have to consider, even before we talk about the broader implication for company earnings on the back of higher tariffs and what that means for the competition landscape for exporters in Asia and the rest of the world for that matter. So right now, I think we need to be very careful about saying what is good for the US. Is it necessarily good for the rest of the world? I think Mr. Damani made some very good points in the discussion that you were having earlier, that the post-Second World War setting was one where the US was sort of the rule-setting body, was promoting multilateralism, open markets. And over that dynamic, you basically had a situation where what was good for the US was good for the rest of the world. It is not clear in an America first, inward-looking policy of Donald Trump, what's good for the US is necessarily good for the rest of the world. So when we talk about Trump trade, we talk about strong dollar. That means EM currency is under pressure. When we talk about Trump trade, we talk about lots of treasury issuances, which may be good because it's basically a result of lower taxes for Americans, but it will probably mean higher interest rates for the rest of the world. When we talk about immigration-related issues, again, going back to Mr. Damani's point, it might be great for some workers who faces less competition from immigrants, but for the rest of the world, it's a more restricted U.S. market access, and that's a problematic thing. So we will take the U.S. rally, of course, in our strides. Most of us and our clients are long U.S. assets, and it'll be great with a strong dollar and a roaring equity market. But when we talk about the world as a whole, I think the impact has to be seen with a far greater degree of nuance.
Taimur, hi, afternoon. You spoke fewer rates by the Federal Reserve in 2025 because of inflationary concerns due to Trump's policies. So how many do you think we now should expect realistically?
I think we should wait till Friday morning when we hear the Fed's commentary. Again, alluding to the earlier conversation, Powell has to be careful. He has a job to protect, and if he sounds too hawkish and starts saying that, we'll have to be very data dependent and have to see the path of fiscal, I think his job will be on the line. So I think that the Fed itself would be very cautious in revising down or guiding the market down with respect to rates for 2025, because we also don't know. I mean, let's also give Trump some breathing room. We can't force our narrative of fiscal irresponsibility right now. He needs to get elected. He needs to have a budget. He needs to pass legislation. Then we will see. So till then, I think a couple of rate cuts in 2024 and some rate cuts in early 2025, that story remains intact. We're not talking about inflation jumping today. We're talking about inflation being a concern for the medium term if indeed fiscal policy is not responsible. So we think that a couple more rate cuts, which will take us to 4% Fed funds rate by the end of this year, is still on the cards. We think that at least 50 basis points of rate cut is on the cards for the first quarter or the first half of 2025. Do we go down to significantly below that? That is the big question. Do we go down well below 4? Do we go to 3.5, 3? Could have made those arguments a couple of months ago. Fed was also sort of supporting that narrative. I think that narrative is under a great deal of challenge.
Okay, all right. Taimur, we do have lots of other questions for you, but we have to take a quick commercial break, so we'll do that. Markets continue to surge, 24,500 on the Nifty. Take that break and we'll come right back and tell you more.
It's 24,500 as the Nifty surges 300 points. Sensex is inching towards a 1,000-point rally. Dow futures, as we've been pointing up more than 1,000 points. And Tesla shares, well, that's the star is born, as Donald Trump said in his remarks. And Tesla shares have risen close to about 12%. And back home, it's the IT stocks leading the gains. The Nifty IT index has a gain of close to about 4+ percentage points. We're in conversation with Taimur Beg, MD and Chief Economist of the DBS Group Research. Taimur, you said what's good for America is not necessarily good for emerging markets. So there is concern that global growth is going to slow down on account of tariffs. How worried should we be? Will this play out only in 2026? Have you done any kind of analysis, if indeed that 60% tariff on China comes through, 10% on tariffs, 10% tariffs on rest of the imports from the world? Have you done the math for this?
Right. So a week and a half ago, the IMF released its World Economic Outlook, and we have copious amount of modeling information on what is the impact of tariff on global growth and the risk from the tariffs that have already been imposed and the cost of what the IMF terms as the economic fragmentation. So I think the analysis is clear. We've already lost a good 25, 30, 40 basis points of global growth on an annualized basis around higher tariffs. We're likely to lose more if indeed we have even higher tariffs going forward. And it is not just a question of a one-off, like 1 year you have tariff and then you move on and you sort of collect the pieces and things are better. It's a permanent loss in global outlook in terms of economic vitality and potential. So the answer is unambiguously negative. Tariffs hurt the rest of the world. The impact on the U.S. is a bit ambiguous in the short term because it offers protectionism to American companies. It offers some protectionism to American jobs. But over the long run, even that is somewhat diluted by the loss of competitiveness and loss of overseas market access because there is tit for tat on tariff. So by and large, I think there's enough evidence and enough estimate to suggest that the plans that Donald Trump has with respect to raising a wall of tariff and the resulting trade war that we're going to have would be an unambiguous negative for global growth.
Okay, Taimur, since you began by saying emphatically it is not a sweep, and I agree with you, it is not a sweep. It is not a sweep yet. So let's consider the other possibility, which is the fact that the Democrats take the House, right? So then you got a Republican president and you got a divided Congress. Now, tariffs, you don't need the Congress to give the go-ahead. But for any stimulus on the fiscal side, etc., you need the Congress. If it indeed is a Republican president and a divided Congress, is it possible that you get the tariffs and all the rest of the stuff in terms of what Trump has been talking about, but you don't get the offsetting stimulus? So in that sense, from purely a markets lens, it's not exactly good news. It's not exactly great news. You will get the tariffs, but not the offsetting fiscal stimulus. Go on.
Right. So if I were a fixed income investor, a divided house would be music to my ears, because as you can see already, the action that we have seen in the fixed income market, the sharp steepening in yields that we have seen over the last few hours suggests that the market does expect Trump to be emboldened and be unchecked. And as a result, U.S. fiscal will go for a toss. It's already in bad shape. It'll go worse. And therefore, we will expect well north of 4% 10-year yield and perhaps close to 5%, even higher than that 30-year yield. So that would be a major tightening of financial conditions at the long end of the spectrum if we see the House, the Senate, and the presidency all with Trump. Whereas if we do see some degree of check and balance, we would expect a modicum of fiscal responsibility. And therefore, as a fixed income investor, I'd be a little more constructive. On the equity side, it is very clear. If Trump is riding on the back of large corporate income tax cuts, it would be great for the margins of companies, U.S.-listed companies, and they will therefore profit handsomely. And that is what the market is pricing in. If we cannot have those things pass through the legislative route, the outlook for the equity market is a bit mixed. For U.S. dollar investors, Trump's ability to impose tariffs independent of the House and the Senate outcome means it should be a long U.S. dollar story, because tariffs would mean other countries will have to weaken their exchange rate to balance out the loss of competitiveness because of tariff imposition. So I think the dollar, the equity, and the fixed income space have fairly different sort of implications for investors depending on the U.S. election outcome. But on the dollar in particular, doesn't really matter. Trump has all the power. The dollar should rally.
And where does this leave the Fed, Taimur, to round this up? I mean, it's a real complex situation, right? Yields are rallying, prices are falling. There's this whole deficit situation that's become very real now. What about the Fed?
Right. And we should definitely put the Fed discussion in the context that it is not all about Trump. Leading into this election, already, I think the Fed was being questioned by the market whether the September 50 basis points rate cut was the right thing to do, whether they have really been able to put the inflation genie back into the 2% bottle, whether there's any seriousness either in the Harris or the Trump camp in dealing with this $1 trillion deficit and $1 trillion interest payment that the US is now undertaking. So I think the November meeting, starting tonight, going into tomorrow and the day after, would already been subject to that sort of questioning, independent of the election outcome. Now we have another layer of complexity with Trump getting elected, and I think it was rightly alluded to in the earlier section. He will certainly demand lower interest rates from the Fed, regardless of what the macro situation is. If the macro situation is indeed one of strong earnings, strong wage growth, strong employment, and sticky inflation, how can the Fed go out and convincingly cut rates by 100, 200 basis points? It cannot. So that's where the seeds of the conflict is being sown as we speak. But that issue would have been there even without the Trump victory. It's just exacerbating or compounding it further.
What's for sure is that I don't think anybody would envy the U.S. Federal Reserve Chief's position right now, given the absolute stark contrast and the complexities that are playing out after this election mandate. Taimur, thank you very much for joining in. Really appreciate that perspective. And we look forward to more conversations as some of these policy issues become a little more clear. Well, since we're talking dollar yields and the direction of the Fed, let's take a look at what all of these news events from the morning and this big verdict, what has this meant for commodities and for crypto? There are some very stark moves going on out there. We have Manisha with the latest. Manisha, busy day, should I say?
Well, it clearly has been, with the kind of reaction that we've seen come in since those numbers started to trickle in. And I want to take a step back and tell you exactly what Donald Trump really said. He said that leave the oil to me. We have more liquid gold, which is oil and gas, than any other country in the world, more than Saudi Arabia, more than Russia. He also said that we will pay our debt off. We will reduce taxes. He also said that China doesn't have what we have. So that is exactly where the commodity perhaps is taking cues from at this point in time. I want to start with what the crude oil prices have done. We have seen a price decline onto this one. In any case, even as the market was heading into the presidential election, it was a record high hedge positions that we did see happen in case of crude there. Well, also, if you look at the markets there, the U.S. production is at a record high already at around 13 million barrels per day. There is an expectation that you could be looking at an opening of U.S. oil and gas as a sector. Well, Donald Trump for some time has been saying that. Remember, this is a sector that has been underinvested. There have been various sanctions on this as well. And we do understand from the filings that Trump received $14.1 million from oil and gas industry for his campaigns. He did ask for much more, but this is what he got in return of various promises that were made to this section. So we perhaps are headed towards more supplies coming in from U.S. and that for some time as a knee-jerk reaction has weighed onto the markets. We've been talking about currency markets since beginning in the morning there. So 14-week highs for dollar index, and that has led to 14-week lows on Japanese yen, 18-week lows in cents of South Korean won, and a record low for Indian rupees where we are trading at. But a big reaction is what we saw come in for the cryptocurrencies. Well, we have seen Bitcoin trade at an all-time highs at 75,000 and above kind of levels as well. So when you look at the last 1 month, it has been a 19% gain. For this year until now, it's a 75% of a jump up and 110% of gains in last 1 year as well, with expectations that this is one sector that would continue to go higher. A lot has been said in positive. We do understand that Trump is invested in cryptocurrencies as a company as well with deals with cryptos. So this is one sector that will absolutely be watched out for. When you look at metals then, and we've seen a deeper decline onto this one as well. So copper and zinc prices are trading more than 2% on the weaker side. The expectation of higher tariffs on China imports is something that's weighing onto these markets here. China, remember, is the biggest consumer when it comes for many of these metals like steel, iron ore, copper, and a producer of many of these metals as well. So likely tariffs absolutely weighing onto metals as a knee-jerk reaction. I also want to talk about gold and silver, where also we have seen a decline come in. Well, remember, it has been a lot of uncertain trade that we have seen in precious metals. What would happen? Who would come in? How will the policies change? That premium seems to be going off right now. So the dollar strength and the uncertainty out of the way, we understand that Donald Trump is back in here, is what is weighing on. This is a chart where that tells you in the last presidency when Trump was in the White House on how the gold prices behaved. The day he joined in, the gold prices were at 1,200, and the day he left, it was at 1,840. We have seen again in that year, we already are trading at an all-time highs right now, so it would be interesting to see on how the gold moves from here on. But even with all of this, now the attention moves to the PBOC, where we have seen monetary policy supportive as a stance continue. It would be interesting to see on what Fed does tomorrow. And then China Congress meeting and the announcement on stimulus, would that come in from 7th and 8th? So all markets would now start paying attention to this. And what we get out of here is what will decide on where this week ends.
Thank you, Manisha. So picture abhi baki hai. It's now over to the Fed and China. Get into a break and we'll come back with more in the market. Stay tuned.
Welcome back. Well, the market's still holding strong, but the underperformer today actually has been the Nifty Bank. Let's get in Mitesh Thakkar to find out what's the trade from here on. Hi, Mitesh. Good afternoon. Good session. We're still holding with good gains, 230 points odd, but we haven't got past the 24,500 mark. What's your view? 2 days, good rally is what we have seen. Should you take some money off the table, or do you believe this market is good for more and maybe it's all set to test the 24,800 mark?
So one item we had, 24,500 as one of the targets. We got an intraday high of 24,535 or something like that. I think taking 20-30% of your long positions may not be a bad idea, maybe 1/3 quantity, purely because of the fact that this still, looks like a bear market rally, and it could have its own dose of volatility and choppiness. So I think do that. The next entry point now will come back at 24,300, and I think I still believe that there's a good chance that we might head towards 24,700 plus levels. So the bounce back might extend, but it's been about 7-8 hours of all green candles. So a mild pullback might happen, especially given the fact that 24,500 is an important pivot. So taking some profits off is what I suggest, but still trading with long bias. I have buy calls on Coforge. Coforge is just on the verge of breaking into fresh highs, so it's a conditional buy. Buy above 78.60, keep a stop at 77.80, and look for targets of 8,000 plus here. And the other one is Page Industries, which I would recommend buying with a stop at about 43,500 for targets of 45,000.
Thank you very much for that. Coforge had blowout Q2 numbers, and the stock since then has done so well. In the last 1 month, it's up more than about 50%. But generally, broadly, IT is higher in trade, and there are three angles to consider. One is on the immigration front, because under the Trump administration, the previous Trump administration, we saw higher visa rejection rate, H-1B visa. And therefore, there were restrictive immigration policies, and therefore the street was concerned that will it play out again the same time. But here analysts are weighing in that the impact this time, even if we have restrictive immigration policies, will be limited because IT companies have reduced their dependence on H-1B visa. Now, the second angle is that this cut, a proposed potential cut in corporate taxes from 21 to 50% for US companies, leaves more money in the hands of US companies, and therefore their budgets go up, even their tech budgets. And tech budgets have been tight. The companies have been unable to spend on discretionary spending due to high inflation. So basically now there is potential for tech budgets to go up. And the third angle is the rupee is at an all-time low because of the strength in the dollar index, and that is positive for the margins of Indian IT companies. And you're seeing some big rallies. So Zensar, for instance, is up close to about 5.5%. Persistent, it's been a big outperformer, and even then the stock is up close to about 5% today, so it's adding on more heft. RateGain, LTE Technology, LTI Mindtree, TCS, these are all companies with a very large 60%, 70% kind of exposure to the US, and IT's on fire today. The question is, will it be sustainable? Prakash Diwan is with us on the show, and Vaibhav Sanghvi, CEO of at ASK Head Solutions, also with us. Gentlemen, thank you very much for joining in. Vaibhav, long or short on tech or neutral? And would you change your assessment post the US elections?
See, I think from technology as a sector, we have seen some good sized correction actually kind of happening post the numbers. Now, after the event of today, my view is that one of the big proposals from Trump administration is that they will rationalize or probably reduce the taxation rates, for corporations. Now, if that happens, what we may see is basically some, disposable income or from some amount of money to kind of increase the, spending in terms of the IT as well. So my sense is I think it will give a good lever for sure. And in a season where all of the companies or all the sectors are not kind of performing well in terms of their numbers, here is a sector which kind of gives you at least some amount of growth, which is kind of visible in that sense, and a sector which is kind of bottoming out. So my sense is basically because of this, you may see some amount of uptick continuing, on this space.
Prakash, any favorite IT stock that you would like to bet on, say for the next 12 months?
Except for Happiest Mind, and that too is more from bottom up, this thing, specific changes that have happened in the last couple of years and their ability to be able to take on more work in the new environment. I really don't think it's a bit too early to celebrate the Trump victory in terms of what it can impact IT stocks with. There's still some time, and I think it's only end of Jan that things will get much more clearer. So I believe a lot of these moves that you see could get sold into as well very quickly if some adverse news flow comes through. So yeah, but Happiest Mind irrespective is something which has consolidated. So from a stock perspective, it would probably be better off than some of the other well-known names.
Hi Prakash, hi Vaibhav, good afternoon, good to see you all in. Prakash, your Diwali pick is working. Nalco, that's up close to around 4% as we were discussing. Trump or no Trump or tariff or no tariff, alumina as it is in deficit. And this one stands to gain because they don't produce so much of aluminium, but they sell the alumina in the open market. So that I think from the time we discussed, it was 220 odd, it's already 245 rupees. So good on you. Prakash, the talk is that Trump is going to emphasize on producing more amount of oil and gas. And for that, there'll be pipes that will be required. One such company is Welspun Corp, right? I think we have discussed this in the past as well. And the biggest drawback for them is there's no orders coming in, which now that could turn around. We have already seen signs of that. And with Trump coming as the US president, well, he could emphasize that even more, which will give them visibility on the US business. Your view on this name, it's at around 770, up 3%.
No, absolutely, Nigel. We spoke about this as well the day they received a big order, and I think that's a start of a very different secular trend for them. His statement that leave oil to me very clearly tells you a narrative that would build up for the next 4 years where they have reserves. They need to start putting that to use. And remember one thing that what they're looking at is an import substitution for oil and gas, particularly for oil. Because that's the way he envisages paying off that mega debt that still stands out there. So I don't think there will be any reason. The good news from this is that a lot of the execution will happen very quickly and will be front-loaded, which means it'll probably be in the early part of the new administration. So yes, great times for some of these companies. Welspun stands to gain well because they also have localization out there. So even if there were tariffs imposed on some of these components, they will probably be able to get away with that. So absolutely in the right spot. And then from a stock perspective, we saw it move to 800 odds and then move to 700, and it's made its march again. So it's in a momentum of its own. Will definitely continue doing well, is my guess.
So Prakash, if indeed tariffs are imposed even on exports from India into the US, which companies, according to you, would be negatively affected the most? Would you look at any of these early trades?
The nature of tariffs is something which is very uncertain as of now. I mean, it's a general expectation that tariffs will be imposed, but it could be different with differential rates for different countries as well, or different components coming from certain countries. So I think it's a bit too early to call out that. But yes, some of the names which have done well in the past because there were no tariffs, inhibiting any growth. You had, let's look at things like transformers. Let's look at things like switch gears or diesel engines and things like that, which could start this thing. So, we spoke about pipes, for example. I mean, if that is a necessity out there, the tariffs will be softer or probably not there. So I think it's a bit too early to start looking at those things. But I don't think India will have the lion's share of the impact in terms of the tariffs as and when they get imposed. So it probably could get away with it on margin, but it's too early, as I said. It's only Jan that you'll probably get to know a lot of these things. But before that, market could probably take a different turn as well. So you could buy those things at lower levels in anticipation.
Prakash, thank you very much for joining in. Weber, weigh in on the market on the whole. Ramesh Damani was earlier telling us that perhaps what we're seeing is just a bit of a honeymoon phase across global equities. It won't last very long. For the Indian markets, we could consolidate. Maybe the high for the year is already past us. It will take some time for us to go back to our earlier highs. What's the overall call on the markets? We've corrected about 6-7% now from our all-time highs.
See, Rima, I think when we came into October, right, we were at a cusp where valuations were pretty much at the peak. At the same time, when the quarterly kind of previews came, there was a clear indication that the numbers for the season were likely to be pretty mediocre or probably lesser than expectations as well. Now, we are at a situation where we've seen downgrades in terms of the earnings. Valuations corrected, a little bit, or I would say, making some of the pockets kind of, interesting. But on an overall basis, my sense is basically a good consolidation is necessary. And lastly, in terms of the expected rate of return from an equity as an asset class, my sense is, again, here our expectation has to be muted as compared to when we compare to the last 3 or 4 years, which we have witnessed. So overall, my sense is I think the earnings should be followed at the time for PE re-rating is probably over. The sectors and the companies which deliver earnings are going to perform, going forward.
Okay, thank you very much for joining in. We'll slip into a very short break. We'll come back with more market talk. Stay tuned.
Welcome back. Markets still holding with solid gains closer to around the 24,500 odd mark. So that's good news. And you have a couple of names like Bharti Airtel now that have moved to the high point of the race. That's a larger weight on the index. It helps when it moves up close to around 0.5%. It was less than 1% higher just around 5-6 minutes ago. But a good time to go to D Street Chatter. Nimesh joins us to tell us what is he picking up. Nimesh, beautiful trading session. Last two sessions, getting into the weekend, everyone was saying 200 DMAs coming, it's coming for sure. The bulls have turned it around.
Absolutely. The second day running in a very strong pullback. And the good part today is, today's pullback, Nigel, is backed by FI buying as well. I'm saying this because there are buy flows and after a very long time, because for the last many weeks and months, we are seeing aggressive selling from the FIs, right? That seems to be a bit changing now at the margin. So today's FI number could be quite critical and important to track. Having said that, there is a small MOC basket selling the last 30 minutes at a leading FI desk, but largely into very selected Nifty names. So that's something to account for, but largely overall the sense I'm getting is that there are buy flows from larger FIs. Also, we have the MSCI semi-annual review tomorrow, which we will react to tomorrow, right? And that again is a big liquidity event. Over $2 billion of inflows is expected for India. So again, that's going to be quite positive. Again, from a sector point of view, technology, of course, is the biggest sector today. Index is up 4%, but metals has seen a big buying interest back, right? So that's one sector to track. And from the fact that now that Trump looks like he's won it and he's going to be the new, president there. A couple of other sectors which could be in the limelight is one, of course, is CDMO players, which especially have US assets. So those companies are likely to do well. You spoke about Welspun Corp. Again, those kind of crude ancillaries is expected to do well. So that's the sector where people are finding for value. But from a technical point of view, I said this a couple of days back, right? 24,070 is a very crucial level. Now that we are above those levels, I think on the downside now, that becomes a very crucial support to track. So at least from the time being, so one big event is out of the way. Couple of more events to watch out for, which are supposed to be binary events, so that's something to track. But looks like after what we saw in US elections today and the kind of momentum we are seeing, the momentum is likely to continue, at least is the feedback, and the fact that there is a FI buying as well, at least in today's market.
Okay, interesting. Nimesh, what about individual stocks?
Well, so the first name on my list is BHEL, a big move on that name. We've seen a stock correcting in the last many days, but today seen a big rally on good volumes as well. The street is anticipating some large order wins for BHL very soon. Now, NTPC has already announced capex of close to 80,000 crores. They're setting up 3 new thermal power plants. So, BHEL is expected to win one of those orders. But additional to that, there is a buzz that BHL is likely to back a very large order very soon. The second is Cipla and Dabur. Both, are seeing. There is limit-based buying orders from larger FIs in today's market. So watch out for those as far as delivery-based buying is concerned. The third name is Kotak Mahindra Bank. Within the private bank, this is one stock. It's been pretty much range-bound in the last many days, but now it looks like there is fresh buying emerging in Kotak Mahindra Bank. And of course, the big catalyst for the near term would be the RBI relaxation, which has been speculated for a while now. And the last is Indian Hotels. Just before the earnings tomorrow, there is a bit of buying interest. While the stock is buzzing, there is selling from larger FIs, is what I understand, in Indian Hotels today.
Okay, all right, got that. So lots of buzzers on the radar. Nimesh, thanks very much for getting us the latest. We do have to take a quick break on that note. We'll come back on the other side, get some final trading calls going, and of course, a final look at the markets before close.
Okay, welcome back. 250 points on the Nifty is what we have, and things are looking very, very good. So 4:1 is the advances to decline ratio. 4 advancing stocks to 1 stock which is down. We've not talked, I think, individual names, so maybe we can quickly pull some of these up. Dixon is up 9%. It's the top #1 volume-led gainer right now. Just these 8-10 stocks if you can put up. Piramal Pharma is another one, 7% higher on Piramal Pharma. Huge volumes. Keynes is another one. I mean, actually, these EMS seems to be a bit of a theme. 11% gains on Keynes Technology. Gale, of course, came out with numbers. We highlighted this as part of our top 10 in the morning. Kalyan Jewelers is up 7%. So that's a very actively traded name, 5th largest volumes. There is Tejas Networks, which is up 8%. Big volumes here again. Look at something like Adani Energy Solutions, 6.5% on that one. Tremendous volumes right now. eClerx is up about 8%. KPIT Tech is up 7%. Rima did highlight some of these IT names earlier. Supreme Industries, 7%, started higher and stays higher. One more EMS name, Sirma, which has had a phenomenal run. I think about 6-7 days back was about 370. It's closer to 600 now with today's 10% gain. NIIT Limited, Skipper Limited. I mean, actually, it's a very large volume day. So sort of a one-sided kind of advanced decline ratio, but backed by solid volumes as well. And of course, this comes on top of what we saw yesterday already, that very, very smart pullback from the day's lows. Mitesh is with us. Mitesh, thanks for joining us again. Before you put out your trades, I mean, I just wanted to ask you, do you think, as Ramesh Damani was telling us earlier, it's a bit of a honeymoon phase which will pass, or, we've already kind of, in a way, paid the price with that 8% fall from the high, September highs? What's your sense?
So I think, I'm not very sure if the entire fall is done with. Looks like one leg of the fall was done, and now we are going through what I would call as a pullback to this entire move. We still don't have indicator setup which suggests that we should start that everything worse is over and we should start getting into or at least retesting the earlier highs. I don't think that is happening. So we'll take this as a pullback for the time being. But yes, trading with long bias, given the fact that the pullback could possibly extend a bit more. And 750, 800 looks a very logical target to begin with. And then if there's more strength around those levels, we'll then revise it upwards. But for the time being, staying with long bias. I have a BTST call on Syngene. I think that's also a recommendation to our clients. So there's vested interest, but the stock appears to have completed a correction, is turning on the upside. So BTST here with the stop at about 896 for targets of 920, and the other one is PI Industries, which I would recommend to BTST with the stop at 4598 for targets of 4650.
Okay, all right. Thanks a lot for that, Mitesh. By the way, just pull up the intraday chart. I think JTL Industries, there was an order win. They've secured a bid as L1 supply for around 36,000 empty GMS tubes in support of the Jal Jeevan mission. Remember, the stock has corrected a goodish bit from the top, but the orders were 265 crores. So that's why that appears like one of the big volume spots, and the stock as well gone up close to around 4% or thereabouts. We'll try to get you more details on that front. But Trump is back, so it'll be interesting to see how the metals universe pans out. The dollar index, remember, it strengthened, and it normally has an inverse relation with LME prices. But it appears the dollar strength could be a near-term phenomena and could possibly reverse. That's the way I think the street is reading it. Trump also, goes harder out at China in comparison to India. So in that sense, that could be positive for India. Remember, commodities, well, they witnessed steep tariff increases in Trump's previous tenure. And so disruption is, there was some disruption in price discovery the last time around. Now, regionalism as well as ring fencing in commodities could pick up. And JM Financial has mentioned in their note that metal prices could inch up under a Trump regime. While Antique expects, well, the impact to be more or less neutral. As they say, tariff hikes is already imposed on Chinese steel as well as aluminum imports. And so no new policy measures are likely to be announced, irrespective of what happens. Now, commodities, well, some commodities are experiencing short-term supply shortages. And in that case, well, you could have a couple of these that do well. You'll have Nalco that could do well because alumina is in shortage and prices have moved up. And also ferrochrome prices have moved up, in that case, that will support infra. So a couple of these pockets will do well, but it's still pretty much up in the air in terms of which commodity will do better than the other.
Thank you very much for that. The Nifty still hovering around 24,500. Things are looking up. But what implications does the US election victory for Donald Trump have for India and India's macro situation? Earlier, my colleague Ritu caught up with the Chief Economic Advisor, V. Anantha Nageswaran, and talked to him regarding the outcome, India's GDP growth, as well as the credit growth slowdown seen. Listen in.
He has been a president before. We all know what are the policies he stands for. There are many areas where we ourselves are working on which will be in line with their policy agenda. So I don't see a major discontinuity or dislocation from the Indian perspective. So that would be my baseline scenario.
All right. Coming back to India, in July the economic survey spoke about 6.5 to 7% kind of a GDP growth. The RBI is talking about 7.2%. The IMF is talking about 7% for the current fiscal year. But there are murmurs, if you talk to economists, that perhaps some of these projections are a little more, less conservative than they should be, given the mixed economic indicators we're getting. What is the number
I
you're
can't speak for
comfortable
others' forecasts, but even in our latest monthly economic report, we did stick to the 6.5 to 7% range as the likely real GDP growth outcome for the current financial year. So as far as we are concerned, in a way, our forecasts already account for some of the high-frequency data indicators that we have been seeing lately.
But 6.5 to 7 is a wide range, because a lot of economists on the street would say perhaps we may not touch 7% this year on the base of 8% plus growth last year.
That is possible, but I don't want to, because we have given ourselves a wider range. Whether the outcome falls at closer to 6.5 or closer to 7, I think it is still, we have still half a year to go. 5 months to go.
Finally, sir, we've heard your views plenty on the deposit growth in the country. Now we're finally seeing the credit growth and the deposit growth numbers overall converge as per the latest data. In fact, credit outpacing deposit growth, rather deposit outpacing credit growth. Are you worried about this credit slowdown going ahead to the productive sectors of the economy?
It's not a worry, because if you look at the first 6 months of the financial year, the credit growth is about 5.5%. If you look at the RBI's weekly statistical supplements, the credit to the commercial sector by scheduled commercial banks was about 5.5% in the first half, which translates into 11% annualized number roughly.
Okay, so you're not going to be concerned about a credit growth slowdown in the economy?
No, credit growth should pick up, and it will pick up once some of the macro-prudential actions have run their course, etc. And also the credit growth may also have been affected by the fact that economic activity was affected by the monsoon rains and so on. So as economic activity picks up again, I think credit growth may also rise.
Okay, get into a break. We've got about 8 minutes left to wrap up today's trading session. It's been a solid session for the bulls. Midcaps are now up 1,300 points. We'll come back with more.
Welcome back. Just about 4 minutes left before the day closes out, and it's been quite a heady one to say the least. We have Anand Tandon joining in. Anand, so we're just trying to wrap our heads around what looks like a very definitive, Trump win, at least as far as taking the White House goes. But, we come back to the central question here as well. The market's been undergoing a correction. Do you think the bulk of that is over, looking at the pullback over the last 2 days?
Well, I don't want to make a call on whether the market is over or not, but nothing much has changed as far as India is concerned. You're still having a market where the earnings growth is slowing down, where valuations are stretched. And if the market comes back up, I don't know what is the driver that will take it further up from here. From the Trump side, of course, I think the one major factor that would change is the fact that, they would get from a geopolitical perspective, you will get a refocus on China as the enemy number one away from Russia, which is good news from India. And hopefully that will also mean more India-friendly policies as far as the global strategy is concerned. And therefore, companies which are in defense, etc., which have had a problem because, for example, the US has been holding back on engine supplies, etc., may actually come through. But those are, near-term triggers which will probably change. But otherwise, it's going to be business as usual. The US, of course, has probably a different trajectory that it will have to follow.
Anand, hi, afternoon. The much anticipated Swiggy IPO is finally open for subscription. Would you subscribe or would you recommend a subscription to any retail investors? Valuations are compelling versus Zomato, but the path to profitability is not clear as of now.
Yeah, well, valuations are compelling only because they don't make money, so it's difficult to, put a valuation to it. The reality is that, I think these are businesses which are going to be highly competitive. The part that they are really trying to grow from is something where I don't know whether the margins can increase dramatically for the industry as a whole. Swiggy, of course, needs to increase its margins. But overall, I think, you are going to be running into a bit of an issue, especially given the context where overall consumption growth is not very high. So it's not as if, the quick commerce market can grow when the overall market is slowing down. And the valuations are compelling compared to a party which is extremely expensive. So overall, my own view is for most IPOs, one should sit by the side and watch the company actually perform once it is listed. You have just seen what has happened with the recent motor company that got listed, that, the numbers change dramatically once the company gets listed because of the various factors that get into play from the promoter side. So I would think that, even for Swiggy, while it does look a little more attractive compared to Zomato, it's not necessarily the best return on equity that you're going to likely get.
By the way, as we're wrapping up, let's just pull up some of these stocks. What a day they've had today. Dixon up 9%, Syrma is up 9.5%, Keynes is up 11%. So the EMS space is really on fire. That's one that really stands out. And then there's Kalyan Jewelers. I mean, it seems like Titan and Kalyan are operating in a very different world. Obviously, there's an inventory issue, etc., that played out for Titan. But yeah, these are some of the major movers and shakers today. Tejas Networks, by the way, also flying higher, 8% higher. On EMS, Anand, I'm not quite sure if this is some reaction to Trump and maybe higher tariffs on China that's propelling this kind of a fresh move. But how do you find stocks like Syrma, Dixon and the likes?
Well, like you said, I think most likely what explains this move today, of course, the entire market is up. So to that extent, you cannot be particularly selective, but it's likely that because one expects to see China in the crosshair for Trump, that, the local companies have a potentially better market to which they can export. So from that perspective, these companies can obviously have a better outlook. Overall, I think this business will continue to grow fairly rapidly. The issue I've always had is the very thin margins that they operate in. Some of them, of course, have better margins, but by and large, the value add is still fairly low. That said, some specific companies are well positioned, especially those which are doing higher quality EMS of the likes of Syrma, etc. May actually, I would hesitate to say that they are well priced, but overall, at least the business outlook looks quite promising.
Thank you, Anand, for joining in. The bell is gone and the markets today have extended their rally from yesterday. The Nifty is closing just shy of 24,500. A powerful 280-point rally on the Nifty. Sensex gaining about 950. This is in reaction to the US election. verdict. Remember, Donald Trump has claimed victory, and perhaps he's all set to be the 47th president of America. All sectors ending in the green, but the biggest gainers were IT. The Nifty IT index ending up close to about 4%. This is followed by real estate, PSCs, the public sector stocks higher in trade. Broader markets outperforming. The mid-cap index up 2.3%, while the small-cap index gaining more than 2% too.
Okay, well, today the broader markets really were on fire. We just named some of those stocks that were, higher, the likes of Keynes, Dixon, etc. That was definitely one trend that played out. There's also eClerx, about 7.5% up. KPIT Tech, about 7% higher. Piramal Pharma, 7 to 8% here on this one as well. Lots and lots of movers and shakers. And then there's GAIL. Obviously, the market was quite optimistic about the second half for this company. 6.5% on GAIL. Zomato ahead of the Swiggy IPO, 6% up here as well. And Cummins managed to turn around quite nicely after the conference call.